Okay, so you viewers out there that are engineers, fact check us on this, but I think what we're ultimately talking about is really complex radiator units, except not for an engine, but for semiconductors.
Welcome back, everyone, to Chipstock Investor. Recently, we've been getting a lot of questions about the cooling systems and power management systems that are placed in data centers. And one of the companies that stands out in this space, especially in the cooling space, is Vertiv Holdings. This company was called out specifically by Nvidia's Jensen Huang at the GTC event in March. So we're going to put this company through our investing framework and see what comes out the other side. But before we get going, make sure you hit the subscribe button. It's a free and easy way to support us here at Chipstock Investor. We appreciate all you viewers. Thanks so much.
Now, we should mention we have put this through our framework before, but this is the first video we're doing on it and sharing our research findings and ultimately what we're looking for if we were to put some money in Vertiv holding stock. Maybe we should just go through a brief timeline of recent events. Casey, you already mentioned this used to be part of Emerson Electric. It was acquired by private equity in 2016 and then ultimately became its own publicly traded stock in early 2020 via a acquisition by a special purpose acquisition company, or a SPAC. Remember those? Fast forward a few years, and this thing really started to get pretty hot when activist investor Starboard of Value took a stake in Vertiv in 2022, late 2022, and continued to talk about it through 2023. They were encouraging Vertiv to increase its profit margins.
Now, many of our viewers probably know that this stock has jumped about 100% year to date. So it's had a lot of fanfare from investors. One of the biggest reasons that investors are so hot on Vertiv stock is that it was, as I mentioned previously, called out specifically by Nvidia as being a business in their partner network. It was also announced that Vertiv would be using and integrating the Omniverse, Nvidia's digital twin supercomputing ecosystem, which can be used to design data centers. That's a brief history of the company and why we're talking about it today. Let's take a look and see where it fits in the semiconductor industry flow.
Exactly. Let's do that. How does this company make money? So, in Vertiv's own words, they're a global leader in the design, manufacturing, and servicing of critical digital infrastructure for data centers, communication networks, commercial and industrial environments, including manufacturing facilities. Their portfolio of hardware, software, analytics, and services aim to enable customers' vital applications to run continuously, perform optimally, and scale with business needs. So if we're talking about the greater semiconductor industry flow, Vertiv falls into the tech equipment and devices segment. They take all sorts of chips, power chips, analog chips and sensors, and of course, controlling all of that, you have to use logic chips to assemble these pieces of equipment that deliver power to data center and communications equipment and manufacturing equipment. And also, especially with data centers and these big AI supercomputers that NVIDIA has been talking about, you also need to figure out how to cool those chips down so that they continue to perform optimally. So that's where Vertiv falls into the semiconductor industry flow. It makes equipment, infrastructure that goes into things like data centers. And we'll really focus on the data center bit because that's why the stock has rocketed higher. So that's where the optimism is. But let's maybe start with the question. There's a lot of parts that go into a data center. NVIDIA's AI systems themselves are made up of millions of components of individual chips and parts and cables and so on and so forth. Is Vertiv really a good place to focus to maximize your investment dollars as a data center bet? We get a bit of a hint from Jensen himself.
Yes, one analyst asked about power generation and whether or not any innovation needs to be made in power, essentially. And Jensen very clearly says that the delivery of power itself is not an issue. This is more of a supply chain and engineering issue. NVIDIA's engineers think about supply chain planning all the time. That's one of the reasons why they are partnering with a company like Vertiv. Vertiv is very important in the supply chain of designing liquid cool and otherwise data centers. They have not only partnerships with Vertiv, but also with Siemens and partnerships with Rockwell, Schneider. These are other companies in the same space to make sure that supply chain is solid so that they can install their hardware.
So in looking at the actual business model, we've come to, for us, an important conclusion. Vertiv is not a simple assembler of parts. It doesn't just take parts and engineering designs from Nvidia and manufacture them, like say Supermicro or HPE or Dell does. But this is really a co-engineer with NVIDIA. Of course, it is still derivative because they need NVIDIA to design the data center infrastructure, the actual computing systems first, and then Vertiv goes on to design the power delivery and the cooling systems. But this is an important co-engineering part of the data center problem, the supply chain. And so we're going to focus on 3 areas here. We went through these 3 points a couple of months ago when we talked about NVIDIA designing bigger, more powerful chips when it announced Blackwell at the GTC event in March. But we're going to focus on 3 of these, and we're going to kind of reverse engineer it because bigger chips, more powerful AI systems, more powerful accelerated computing systems means more power consumption. That's the problem everybody is homing in on here. And it is a big engineering problem because as a result of higher power consumption, you have resulting heat. Heat is a big problem, as you know, sitting at home, maybe you're at work, working on something, and the fan kicks on in your PC or your laptop to keep those chips cool. Too much heat, and then the software performance starts to suffer. And then also as a result of heat, you have expansion. And again, when you're talking about millions of components in a data center server, in an AI system, and many of these things are super, super tiny and microscopic. When they expand, there's potential for those parts to break. So you want to keep those systems cool because they're going to wear out very quickly if you allow them to heat up.
You may recognize this picture from our last video on quantum computing, but if you haven't seen it, make sure you go check it out. But speaking of this power use and cooling, we'll talk about what this device is in our next video on quantum computing. Hint, it has something to do with cooling.
Yes, this cooling problem is going to be an engineering issue for a long time. And before we delve a little bit deeper into what Vertiv does exactly, let's maybe explain why heating happens in the first place. So we're talking about semiconductors, predominantly silicon, but these devices are far more complex than that. They're made up of all sorts of materials, insulators, which obviously block the movement of electrons, metals, conductors like copper, which allow for the easy flow of electrons, and then semiconductors somewhere in the middle, like silicon. And whenever you have resistance, and that's why these things like silicon are called semiconductors, they do put up some resistance. You have to reach a certain energy level before the electrons will start to move and jump from one atom to the next. Whenever you have that resistance and the extra voltage, the extra punch that you need to get electricity moving, you're going to have a heat problem. That is a very super high level non-physics explanation for why heat is a problem. But it's a big deal. Casey, you read the quote from Jensen about some of these AI servers drawing 120 kilowatts each. It's a lot of power consumption per server. So what exactly does Vertiv do? How does it fit in?
Vertiv focuses on 2 areas specifically, power and cooling. And they're trying to do that in the most efficient way possible. Really, power efficiency is key. That is really part of the secular growth trend in the economy as a whole today. This is a slide that shows some of the power solutions that Vertiv provides, all the way from the power grid to the actual server chip. And shifting to some of the cooling solutions that Vertiv provides, this is just a brief overview of why it's essential. These computing systems, especially for accelerated computing, have more chips, they're bigger, and they put off a lot more heat. Thus, the need for high efficiency cooling.
And so maybe another recent event to briefly highlight here, we'll come back to this later on in the video briefly, but to double down on this particular segment of the business, Vertiv did recently complete the acquisition of a liquid cooling startup called Coolterra in December. So obviously the company, power delivery, that's been an engineering issue for many decades, as long as electronic devices became a thing, getting more power in a more efficient way to hardware, to tech hardware, has been an issue. But now cooling, specifically liquid cooling, becoming a bigger problem to solve with this data center secular growth trend. And some of the slides from Nvidia's GTC keynote that Jensen showed when talking about the new Blackwell platform illustrate this. Casey, you already said more chips per server, bigger chips per server, and then you have all of these servers strung together with networking, with cables, with networking chips, software that helps manage all of it. We're now at a point where you can string together 32,000 of these GPU chips together. They're working on ways to scale this. Broadcom in particular talked about trying to scale this to 1 million GPUs, accelerated computing chips, networked together. More chips, bigger chips, all of them networked together. And so as a result, you have to figure out a way to cool all of this increasingly complex systems so that they continue to perform optimally. So new engineering designs needed to cram these systems. Yet another system needs to get shoved into the data center. And the results of making a switch from an air-cooled server or a rack, that's the shelf that the server gets pulled out, like the drawer that the server sits in, making a switch from air-cooled to liquid-cooled can have a really, really positive impact on the performance of the data center. So air-cooled, that's a fan blowing air. Again, if you're sitting at home, maybe you hear the fan kick on your PC or your laptop. In data centers, there's a need to make the switch to a liquid-cooled rack.
Here's a few specific examples of what Vertiv offers. This first one is direct to chip. And you can see on the left side of this infographic, the direct to chip cold plate. There's a cooling plate directly attached to GPUs and CPUs, and then liquid to liquid heat exchange there in the middle. So getting that heat away from the chips and evaporating it away from the server rack. The second one they noted was the rear door heat exchanger. That's where there's an air to liquid rear door that is placed on the back of the server rack. Fluid goes through the heat exchange coils in the back of the rack that absorbs the heat, and it's carried off by fans. And this last one is an interesting one. It's immersion cooling. That's where the server and the IT equipment is actually submerged in a tank with thermally conductive but dielectric fluid. That's fluid that's electric non-conductive. And that, of course, there's no need for air cooling because the equipment is actually immersed in fluid. And it says that this is actually the most energy efficient way to cool IT equipment.
These are maybe some pretty complex engineering concepts to think about. Casey, would this be fair to maybe compare to the radiator in a car? Of course, not talking about electric vehicles, but like good old fashioned internal combustion engine. Is this basically like a radiator?
I don't know. I guess so. I haven't thought about it that way, but I think you're right. I think it is quite similar to that.
All right, so you viewers out there that are engineers, fact check us on this. But I think what we're ultimately talking about is really complex radiator units, except not for an engine, but for semiconductors. Okay, we wanted to briefly touch on this as part of our framework because, Casey, you and I have reached the conclusion that Vertiv is a company that we're interested in keeping tabs on. It's an interesting business model. They're engineering things that are going to be a necessity for a long time. So one of the next things that we like to look at is who are our fellow shareholders. We already talked about Starboard Value taking a stake starting in late 2022. Vertiv is not a new business. And as we would expect, most of its shareholders are institutions. There are very few insiders or C-suite ownership in this business. You can see that in this slide here. So that roughly meets our checks. We don't see anything that sticks out as particularly concerning with our fellow shareholders should we decide to own Vertiv as well. But let's talk about this, because this is going to play into how we judge the financial strength of Vertiv. Who exactly are their competitors? And whenever you hear talk, like Jensen said in the quote you mentioned earlier, about this not being a problem of invention, but really just supply chain engineering, that's a telltale sign that Vertiv maybe doesn't have a really super strong competitive advantage. It might have a relatively strong competitive advantage. They are solely focused on power delivery and cooling. So that's a plus. But there are lots of competitors here. They have, as they mentioned in their annual report, some niche players that maybe address part of the solution that Vertiv offers its customers, like Nvidia and companies that install Nvidia equipment into their data centers. And then they also have these really big global competitors that are well diversified. One of them mentioned in that Jensen quote is Schneider Electric. Also, you have companies like Eaton, Legrand, Huawei in China. And then also not mentioned in the 10K, you have competitors like Siemens, Rockwell Automation, and GE Vernova, actually, which was just separated from the former GE parent company. Remember, GE split into 3 separate entities early this year. One of them is this GE Vernova, which is actually a more focused bet on power delivery and cooling, just like Vertiv is. So this is a key risk that is going to color everything we talk about next with the financials.
We'll show you a slide from our friends at Main Street Data that shows the historical gross margin and operating margin since 2019. And I think this illustrates well why the activist investor Starboard felt like they needed to get involved and get a new management team in place, because the company was focused on revenue growth. However, it was not so focused on increasing their profit and operating margins.
And to be completely clear, what we're looking at here, roughly mid 30% range for gross margin on product sold, and mid to, and maybe in a good year, high single digit operating profit margins in a good year. These are not particularly great profit margins for a healthy engineering and manufacturing business, a vertically integrated business that both designs and manufactures equipment. We'd be looking at least, I think, a low teens operating profit margin. And Vertiv has a ways to go to get there. Now, of course, we do have the big dip from the end of 2023 where they hit 10% operating margin and then basically zeroed out in Q1. A lot of that has to do with the recent acquisition of Coolterra that we just mentioned. But Casey, as you mentioned, for this investment to really make sense, what we would expect to see over time is not just a revenue growth story, but increasing profit margins along the way. That's going to be really, really key if a Vertiv investment is really going to work out. Let's maybe point out a couple things on the balance sheet.
You can see at the end of March of this year, $276 million in cash and cash equivalents on the balance sheet. Just 3 months prior, it was at $780 million. That reduction was due to some stock repurchases that they made in this last quarter. And then as far as their debt goes, they actually have quite a bit of debt, nearly $3 billion in their long-term debt. And Nick, tell us a little bit about this warrant liabilities.
You'll see that warrants pop up as a current liability, nearly $372 million. The good news is there's no long-term warrants listed. What warrants are a right to purchase new Class A Vertiv stock. This is related to that SPAC acquisition, Vertiv becoming a public company via SPAC back in the beginning of 2020. So the institutional investors involved in that SPAC are granted warrants, this long-term option to purchase more newly issued stock at a given price. So the last bit of those warrants are coming due this year. What this is going to do is it's going to dilute existing shareholders by the equivalent of $372 million. So that's going to get added to the market cap of Vertiv. And when it happens, all things being equal, stock price being held constant, what that's going to do is it dilutes shareholders, and there should be a corresponding reduction in stock price as a result. Vertiv's market cap currently at about $37 billion. So this represents a roughly 1% dilution event. Not a huge deal, but that's what those warrant liabilities are. Expect those to disappear off the balance sheet at some point this year. But Casey, as you point out, the debt, high level of debt, not a good thing.
Why are they in debt? Is that a fair question?
Yeah, I think it is a fair question. And it's probably just left over from Emerson Electric spinning it off. Oftentimes when there's a spinoff from a larger parent organization, what they'll do is they'll saddle the spun off company with some of the debt that they don't want to deal with anymore. You see this all the time. IBM did this when they spun off Kyndryl a couple of years ago. There's other examples, but it's a liability that needs to be handled by Vertiv, and not a lot of cash to offset that. So that means limited ability to go out and cut deals. Maybe not the cleanest looking balance sheet that gives them capital allocation flexibility.
It's a nice parting gift from Emerson.
Sure was. Okay, let's maybe talk about the company's capital allocation plans, because they made the liquid cooling acquisition at the end of 2023. Data centers are a secular growth trend. This must be a blistering growth stock, right, Casey?
Well, blistering might be a bit of an overstatement. They actually project between 11 and 13%, 12% at the midpoint on sales growth. So I wouldn't say blistering.
I guess I wouldn't either, except I was being sarcastic.
Oh, okay. All right. This does imply around 34% adjusted earnings per share growth over 2023 and a 10% free cash flow growth over 2023. They're headed in the right direction, and this is a solid business.
Yeah, it is a solid business. And after the Q1 update, they did raise their full year expectations just a little bit. And organic sales growth, by the way, excludes the effect of acquisitions. So that Coolterra purchase, not really expected to add much to the growth profile yet. That was a cooling system startup. Maybe that Coolterra purchase kicks into higher gear maybe in 2025, 2026, as they take that technology and integrate it into what they're working on presently with Nvidia. So I think what we're looking at here, Casey, is, yeah, it's an interesting business. It's a solid business. We definitely want to keep following, but I think ultimately we just have concerns with the valuation given how competitive and how strategically important Vertiv is in this data center power and cooling growth trend.
Yes, I absolutely agree. Price to earnings for Vertiv is right around 92, 93x. Their price to free cash flow at right around 43x. I think we're past the point where it's a value, at least at this point. We missed it. It was something we looked at previously and we decided not to buy it at that time. And we have to live with the fact that we missed it. But it is something that we want to keep an eye on because we think it is definitely going to be part of accelerated computing's secular growth.
Yes, such is life. Simply owning Nvidia so far in 2024 is just not good enough given this environment that we're in. I think we're in agreement on that, though. We want to watch this business, and given the right price, maybe we'll change our minds on this and start nibbling on a business like this. But in the time being, and Nvidia is actually, at this point, arguably, you could say one of, if not the largest research and development engineering company. And they're also working on this problem as well. Like you mentioned earlier, Omniverse, Vertiv is part of the Omniverse platform for designing digital twins, including for data centers. So simply owning NVIDIA kind of almost gets you a little bit of this data center power delivery and cooling solution simply by having NVIDIA stock in your portfolio, because they've got their bases covered as far as that goes. So I think that's why we're in no hurry to try to chase a stock like Vertiv. And we're just going to be patient and see how it plays out.
All right, everyone. Thanks for watching. Again, here at Chipstock Investor, we'll have our show notes available over on our Ko-fi page as well as on our Discord channel. We'll talk a little bit more about cooling and power supply over on our Discord channel a little bit more in depth. It's only $5 a month and it gets you access to a great community. Check that out in the description below. Make sure you're subscribed to the channel. And we have, of course, that quantum computing video coming up later this week. We're going to expand on our last video and talk a little bit more in depth on what exactly some of these companies are producing.